So hello guys, so today we are going to talk about candles. So what is candle? Candle for me is one of the most powerful price indicator. One of the most powerful price indicator. So you can hear some people say, oh, I don't trade with indicators, but that is a lie. As long as you use candles, bar charts, whatever, that's an indicator. So candle is one of the most powerful indicator. Now when you look at a candle, you would see this is what we call a bullish candle, this is what they call a bearish candle. Now, I define this is the psychological representation of market participants' action over a period of time with respect to price. So this is what participants in the market, it represents the psychology of what they are doing over a period of time. For instance, if you see a bullish candle, it just means that, market participants started around here. Now we're able to push price up and closed around here. So we call it a bullish candle, which means that there were more buyers in the market than there were sellers. Now, a bearish candle means there are more sellers in the market at a particular point in time than buyers. So here we have, because this is a bullish candle, we have the opening price with respect to time, with respect to price, sorry. So this is the opening price. So the opening with respect to price. So the opening price. So this is the opening price and market opened here, and then this is the closing price. This is the high or the low with respect to price. What I say is the high and the low. Now understand that when you are in the markets, you can have something like Euro USD. You can have something like Euro USD. Now this could actually mean different things to a whole lot of people. Let me increase the thickness. So when you have Euro USD, now Euro, if you are considering Euro, this could be the highest price. Now if you are considering USD, this could be the lowest price for USD. I don't know if that makes sense. So this could be considered the high or the low, just with respect to price, depending on the price of what are you looking at. Are you looking at the price of Euro? Are you looking at the price of dollar? So when people say this is the high or this is the low, they are not wrong. So the only place that you can say, okay, it is what it is when it comes to the opening price and the closing price. So for whatever we are looking at, whether Euro or USD, this is always the opening price, this is always the closing price. But for the wicks, we call these tiny lines the wicks. But for the wicks, it can either become the high or the low. Now what does Euro USD mean? Euro USD means that we are pairing Euro with respect to USD. Now how many Euro will it cost to get a particular amount of USD? So if there is a bullish candle, meaning there were more people buying Euro than people buying USD. Now if they are buying Euro, means they are selling off USD. Now understand how transaction works. How transaction works is this. This is individual A, this is individual A, and this is individual B. I don't know if you guys can see this. So this is individual A and this is individual B. So this is individual B. So if, for instance, I have USD and I see that, okay, Euro is about to appreciate. So what am I going to do? I'm going to sell my USD to this guy and buy up Euro from him. So I'm going to buy up what? Euro from him. So the fact that I am selling USD will weigh on the price because it just gives off this demand and so everything's about demand and supply. So when I am selling USD, what happens? It starts to depreciate. If people are buying more of Euro, it starts to appreciate. So when it starts appreciating, this indicator, which we call the candlestick, will start what? Showing that appreciation. To start showing the appreciation in what we call a bullish candle. Now in Euro USD, for instance, let's say for instance I'm having a hint of there are things showing me that okay, dollar is going to what? Appreciate. What am I going to do? Since I've bought euro, what am I going to do? I'm going to now sell back this euro to this person, or let's say this is another individual, sell back the euro to him and buy up what? USD. So buying up USD, since this leads this, what will happen is that price will start to what? Go down. Price will start to go down, meaning the base currency, which is euro, will start showing weakness to start going down. And then this will start what? Increasing in strength. So that is why I said the wicks can be a high or the low. You can say this is the high of the candle, you can say this is the low of the candle, depending on from which perspective you are looking at it. So I don't know if that makes any sense. So this is it when we talk about this, about candles. Now let's look at, this is a bullish candle as we have established. Now this is, if you go to every chart, you are going to see something, or every trading platform, you are going to see this line representing time and this representing price. These are two things you will always see, time and price. So let's say this is Euro USD, for instance. Let's say this is Euro USD. So let's say this is Euro USD, meaning Euro is what? Appreciating, right? So let's say this is $1.12, meaning that price opened what? At $1.12. This just shows that €1 is selling for what? $1.12 as at when market opened. Now we'll start appreciating. So as at this level, we might have $1.13, meaning that euro has appreciated to be what? That €1 is now what? $1.13. So it has appreciated to be equivalent to $1.13. That is an appreciation. So this becomes what? The closing price. At what price they close. So market utilizes two things, time and price. Now when we closed here, maybe probably the time was, when we opened, maybe the time was 0.00, always, not maybe. So, and then when we achieved this level was 11:59 p.m. 59 p.m. And maybe when we achieved the high, which means maybe this high was around 1.14. So maybe when we achieved this high was around 3 o'clock in the afternoon. So which means that any person that bought, here and sold around here would make a profit of $0.02. So that is just it. So market works with time, and what? Price. So this is just an illustration of how the market works. Now let's look at this. Let's break it down more. Now let's say price opens here. This is your 0. Sorry, let me clean up this. Price opens here, which is time of 0. The time is 0.00. Now let's say this is 7.00, and let's say this is 3.00, and let's say this is 11:59. So there are other times in between here, you know. So we have different times in between here and different prices. So let's say this price here is 1.11. Let's say this is 1.14. Let's say this is 1.20, and let's say this is 1.23. Now these are different time, different prices. So market opens here, you know, with time. The price is fluctuating, going up and down with time. You know, then it forms a low. Maybe this is just a whole day. We're just looking at probably maybe a daily candle, because this is just like one candle. So this can be a daily candle, 4 hours, you know. So if we're looking at the whole day, so with respect to time, you know, it starts depreciating, and then probably people start to buy around 7 o'clock in the morning, and then you see price, you know, pricing it in, increasing, appreciating, and then at a point some people will now say, oh, this is enough for me, let me sell. And then they sell and they sell, and they will range, and price closes here. Automatically this becomes what? A bullish candle. So this is like an illustration of what, you know, this one candle you are seeing could be like a daily candle. It could be like a daily candle. So this could be like a daily candle. So it just shows what happens in a whole day. You know, there were more buyers. People were buying more of euro and selling their dollars. So as you could see, now this is us trying to illustrate the whole moves that happened in that whole day to now give us that what? Bullish candle. So when we go to this place, you will see it. So this becomes that opening price, the week. So the week, and then what? The closing price, and then the other part of the high or the low, whatever, depending on which one you're looking at. So let's say we're looking at euro. So this becomes the high for euro, the high for that particular day or for that particular period of time that is represented by a candle. So now let's look at this more holistically. I want you to understand that in a buy day, people are also selling. Now, for a transaction to be complete, we have to have what? Buyers and sellers. Now, if I go to buy something, maybe groceries, I have to have money to buy, and then if I offer the individual that is selling money, he will give me the product. So they have to be like a buyer and what? A seller. So they have to be a buyer and a seller. So in a whole day, someone has to be selling. So before people start buying, you know, someone has to sell to them. Now what I'm just trying to illustrate here is to show you that the wick of a bullish candle is a representation of sellers, which means this place is a representation of sellers, this place is a representation of sellers. This is where there are the bulk of the buyers. But in the whole day, we would notice that there were more buyers than sellers, you know, because the bulk of the move from when it opened showed that there were more participation in like the price. Sometimes you could actually see that the combination of the wick up and down will be bigger than that of the body, but that doesn't matter. What matters is that it closed higher than the price it was at when it opened. So which means that from the time it opened to the time it closed, there were more participation of buyers. So you see that people stay selling, they stay selling to these guys, they stay buying up. So that's that week, and then there are buyers here, they stay buying and buying and buying. So they got to the high, and then what? There were sellers. So maybe probably these people that were buying here, some of them stayed what? Selling. So people were selling, while people were selling here, some people were buying from them. And when there was more buying than selling, price started doing what? Going up, because there was demand, and the demand was greater than the what? The supply. And when demand is greater than supply, what happens? Price go up. So that is why you see this. So there were lesser sellers and more buyers, lesser sellers. So when the demand for buys is greater than the demand for sell or the supply, as the case may be, we now see what? A bullish candle. So let's recap. As you could see the illustrations here. So I want you to really understand these things. So this is the lowest price with respect to time. Remember, you can only say, oh, for a period of time, this is just the lowest price, this is, but when you come to value, you can't just say this becomes the high or this becomes the low. It's just with respect to time. So everything is with respect to time. So with respect to time, this is the lowest price. With respect to time, this was the highest price. Now that brings us back to what I was trying to explain here. This is the open, this is the highs and the lows with respect to time, So automatically I've come to understand that a candle is just a psychological representation of the activities of the market participants over a period of time with respect to price. So understand this. This is what a candlestick is all about.